The euro currency makes a big move lower, a new year-to-date low, and closes below 106.5 for the first time since going back to early November. So a big move. The dollar saw a big bid today and this week, not only in the fact that they're kicking Fed rate cuts down the road a bit. Right now, the first Fed rate cut is priced into September, but also seeing a rise in geopolitical risk causing a flight to quality bid in the dollar, pushing the euro lower again, closing out the week below 106.5 for the first time since early November. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll notice that as the euro has been moving lower, we've seen volatility firm. And in fact, we're seeing volatility nearing year-to-date highs in the euro on the close today as prices were continuing lower. Lastly, let's talk about what we have next week. Next week in the U.S., we have some data points. We have retail sales, we've got some manufacturing data and housing, but really all focus is going to be on what we're hearing from Fed speakers, including the Fed chair, who will be speaking on Tuesday. Obviously, a lot's changed in the U.S. here, given the fact that inflation came in sticky high, economic data still coming in very mixed, and the Fed rate cut expectations are being pushed out further down the calendar. It'll be very interesting what the Fed chair has to say after all that's happened over the last week. So heading into the weekend, the euro making new year-to-date lows, closing at its lowest since going back to November, below 106.5, ahead of next week's retail sales, housing, manufacturing, and Fed Chair Powell.